Apple shares getting a downgrade this morning from Jefferies. Analysts there saying their supply chain check suggests the all-glass iPhone has been canceled due to low yield. Jefferies says it views this as a major setback to efforts to bringing in higher-priced phones amid soaring memory costs. The firm is downgrading the stock its rating on the stock to an underperform with a $264 price target, which is about 16% below where the stock is right now. Joining us now for more on Apple, Gene Munster, Deepwater Asset Management Managing Partner. Gene, great to have you with us.
Hello, Melissa.
At the same time, there is a report from TrendForce saying that Apple's going to just eat the higher costs of the iPhone 18, which will put, ostensibly further pressure on margins. How are you feeling on Apple since it hit an all-time high, at the end of July and hasn't really seen or been close to that 344 level since?
I'm feeling good about it for two reasons. Number one, I think that the guidance that they gave for the September quarter, which recall was revenue growth of 9 to 11%, the street was at 12%, triggered a 9% sell-off in the stock. I think that guidance really was much better than what the initial numbers looked at. Just to put some quick context on that, they obviously had the FX headwind, which is plus 2.5%, so that dampened the growth rate. And then separately, I think there was a dynamic. They had this inventory dynamic, which had a negative couple percent impact. But also importantly, I think Apple is moving to a shifted upgrade cycle. Specifically, this fall, we're probably going to see the high-end phones get upgraded, which is typically about 60% of the new phone sales. But they're probably going to push another 40% into the March or June quarter of next year. And the reason why that's important relative to guidance is Apple's not going to announce that when they report their June quarter, but their guidance for September is going to reflect that. And so I think that if in fact that does happen, they shift this product cycle, I think that the numbers, investors will start to do the numbers. And effectively what happens is you get some more juice out of September because people who can't hold off are going to upgrade to the more expensive phones. And then separately, you get that extra boost kind of next year. And the net effect of that, I think you're going to get higher sales. So Melissa, when you put this together, I think still at the core is the iPhone, at least for the next few quarters. And then, of course, you've got some of these other X factors regarding the new Siri. And so I think that Apple's in a great position. Last piece that I think largely gets missed. There's going to be a massive upgrade cycle around consumer hardware. That's probably going to start 27, mid to late 27, and probably go for a few years. And that's based on personalized AI that's going to do inference on device. That's going to benefit Apple. That's going to benefit other hardware makers. And so when you put this together, Melissa, I think shares are undervalued, and I think we're going to see a strong next 12 months.
That assumes they get the memory that they need, Gene, and I'm sure they will get the memory that they need, but it could come at a cost. And so what does it do with that cost? Does it eat that cost, or does it pass it on to the consumer? Does that then impact uptake in that cycle that you're calling for?
Right. So there's the two factors there, of course, the increased price. We haven't seen the new prices with the new iPhones, but I think you can rest assured it's probably plus 15%. That's a big jump when you look at the factor that effectively the average selling price of the iPhone is about $850. And so we're talking about $125 in jump. But keep in mind also that the majority of people buy these on a subscription basis, whether it's through the carrier or through Apple. And so we're talking a couple dollars per month. I think that the demand softening related to this price increase is going to be modest. And I think the net effect of all of this is you're probably going to see somewhere between an 8 and a 10% bump in revenue growth. And so if we look at the calendar 27 numbers, the street's high single digits. I think you can see low teens growth rate. And as far as margins is concerned, yes, the CXMT opportunity is juicy. It's juicy in the context that 20% of iPhones are sold in China, so that's where that cheaper, in quotes, memory would go if, in fact, they do that, if they get that. But I wouldn't focus too much on what potentially could happen on the supply chain on memory. Focus more on the price increases. There's substance there. It's going to basically keep margins stable. And at the end of the day, if you believe that AI, there's a big opportunity around personalized AI, the opportunity for Apple is much bigger than any sort of nuance around memory costs.
Now that Apple has clearance in China for AI, Gene, will we see a bump higher in that market? There's a Reuters report this morning that Apple's working right now to integrate Qwen into their Macs.
Well, that's the big X factor in terms of, getting this personalized AI outside of U.S. And you're picking up on a sensitive topic related to the opportunity with their personalized AI, the new Siri, and that sensitive topic is that it's only about 40% of their revenue is going to benefit from these new tools that are available in the new beta. Europe still has not approved it. China hasn't approved it. If they can work with some of these third-party models, that could get us closer there. So all the goodness around the personalized AI, it is somewhat diluted regarding the timing of all this. As far as when we're going to see some of that in China, my guess is we're probably still a year or two away from really full personalized AI integration within Apple AI devices in China.
Hey, Gene, I wanted to ask you about Google. We're going to be talking to Vinod Khosla in the 8 o'clock hour. He's helping back Jeff Dean's new company. Of course, there's a whole number of people who are effectively leaving Google or stepping back, including Demis. Curious what you make of that and what your reaction in terms of the way the stock should perform in terms of where they are in the AI race.
Well, this one has been, it's a dynamic topic. I pause because there's a lot of forces that we think about here. Brain drain is critical. I mean, this is something that we can't just look past the headlines. If you look at Google, we've had, by my measure, about 6 major departures over the last 3 months. And it's easy when you look at the impressive numbers in June and look at what search was and look at GPC growth, 62% or 82%. The expectation was for 62. All that goodness, I think, kind of hides what is going on underneath the surface at Google, and that is brain drain. And we're starting to see it in the models and these rankings. We're starting to see it in the progress relative to the progress that GPT has made. You're starting to see Gemini start to slip on those leadership boards. And so, Andrew, I think that this is a really big deal. I think that brain drain is and brain gain is one of the critical kind of things to look at below the surface. And all I can say is that what's going on Google is not a positive developing trend. And I don't know if there's a good explanation that they can give that are going to make investors feel comfortable about the progress.
Let me ask you this. So one of the arguments that they would give is that they're halfway through whatever the next big model development is, that there's work to be done while they're developing and training that model. But to some degree, a lot of it gets baked in early. So if they're halfway through, it means that the former team, at least, clearly was working on whatever this new model is. I guess the bigger question is whether you think they have the talent to create the next model.
Exactly.
Or the next model is maybe what we're really talking about.
The next model. I talk about these 6 departures. They got tens of thousands of engineers. They have probably 500 key AI engineers. Why does 6? Why am I focused on these 6? Is because it's a culture, and this has been kind of highlighted by some of the recent departures at Google. It's about a culture of innovation around AI and all the subsequent hires that these critical people can bring. And so, but to your point about the next model and the next model, if we look at that scorecard, is what we're seeing with Grok has made a lot of improvements. We're at 4.5, 4.6, and 7 come out over the next couple months. 5.0 out supposedly at the end of this year is going to be trained on all the SpaceX engineer data. I bet you're going to see Grok in the top 3 models. It's never kind of broken into that top 3. It tends to be 5 or 6. That's important, that kind of 2 or 3 miles down the road. My sense is Gemini is going to slip a little bit over that. And that, of course, is what investors want to always focus on. What's going to happen in the next 6 to 12 months.